Oh, hi. Welcome back, folks. Well, today is Super Saturday, the 20th of June, and I'm going to do this pre-market analysis here today instead of Sunday. I'm going to post it today. It looks like I couldn't trade today if the market was open because I got locked out. I set myself up to only do so many trades a week, and once I exceed that number, I tell the system to sit me down because I'm doing too much. But we had an interesting week, a very, very interesting week, and let's get into this weekly outlook. So let me go to the month here real fast. Wow, I see something interesting happening here this month. So if we don't get a good strong push-up breaking out 31,100 area, I'm going to put this as a monthly high. I should have a monthly high in here somewhere. This month's high price. And because of all the notifications, I can't really see that wick there. So to go here, I'm trying to go down to a week. See if that moves it. So then this would tell me our weekly low, monthly low is about there. So where's our monthly low? Monthly low. Now I'm going to lock this in on each of these because that's important. All right, so this being the high, go back to the month. Almost seen that candle. Yeah, it's about right though. Yeah, it's just right. Now we've already hit a high. If we hit a high here in the NASI, and if I was to do a measuring fib just from these 2 weeks out, actually these 3 months, and I was to remain bullish, I'll be looking at taking profit at the 38 mark. But this is a 3-month look. You have to consider seasonality. We're in June, and July's coming really quick. We're going to have the July contracts rolling out here pretty soon. So let me not get ahead of myself and focus on our weekly and trade setups potentials for this upcoming week. As I tighten up this Fibonacci, I'm going to lock that too. Now I'm not going to put the Fibonacci right here yet. And I'll show you why in a minute. Alright, so we had some good price action here. And I was able to capture some points out of the market. But let's see where we are here now. Now, I want you to keep in mind what you're looking at. Each one of these candles represents a full week of trading. So 3 weeks ago, we had a bearish engulfing candle. And it produced a little drawdown. And what it actually did was, it went into this weekly fair value gap. So do I have a weekly fair value gap? I'm sure I do somewhere. Anyway, I'm just going to create one if I don't. So text, this is a weekly fair value gap. And what week was that of? That was of the week of May 4th. Since it's a weekly, let's make that pink. Beige. Can't see that green. Turn the text a little smaller. Yeah, let's keep it. It's going to be looking different on a different time frame. If I can grab this here, copy, case I didn't have that, I'm going to put create one here. All right, so now this is a weekly chart. So I'm going to be more specific now. I'm going to go to the high of this week. I'm just going to say weekly high. Okay. Weekly high. I don't want it red. Let's get a green look. And just in case I don't have a template for it, I'm going to create a template for it to use. And I'm sure I probably have a template already. But it's always good to have it available. So that's going to be our weekly high. And what we're going to be watching in this upcoming week is if we're going to go higher or are we going to go lower. That's all we want to focus on, but we want to drill that down to the lower time frames. And make sure we watch price. And make sure we have that template as well. And I'm sure I probably have it in there already, but I also use different things. So we know we have a monthly high. The monthly high is 31,100 area. We had a failure swing after this dark bullish engulfing, bearish engulfing, excuse me, bearish engulfing. It pulled back to half of that. So let's break down the daily now. Alright, so here's our monthly high over here. Relatively equal highs, I would say, right? And gonna lock that in. So we have some relative equal highs right here. And this liquidity is still resting there because we didn't get a break of that yet, right? We're showing signs of weakness. Here's something that's interesting. Here's something that we should also be aware of, but it was already filled. That's a volume imbalance, but it was filled here with that wick tail. Now we didn't break a new high here, and this is on the daily. So we're going to annotate this. I'm going to use this as a relatively equal high. I know I had a weak that. Where's equal highs and lows, double top area? I'm going to lock that. And then we see how price moved on Friday. It closed lower than it opened. So here's a failure swing here indicating lower prices. It failed to move up there. I have to see what the news is going to be like this week coming. Let's see if we can check some news here. Where is our news calendar? What's coming up this week? We're looking for the 22nd. And June 22nd, we have no real news on the 22nd. We have some S&P news, service PMI, manufacturing PMI for the U.S. The notes. So we don't have a lot of news on the first trading day, which is beginning on Sunday, but we'll be back on Monday as well. So now, since this is a daily candle, I'm going to highlight the daily candle and make that the daily candle low. I know I have a daily candle in here. I'll say a candle daily low. And we're going to lock that.
Now let's get into session times. Now when you trade, there's some prime time during every session that's more active than others. Typically it's the opening bell time and after lunch. However, some people have strategies for every session. I actually have strategies for every session, but I don't trade every session. I tried to do that when I began trading to understand how the different sessions work. And I found that the New York opening sessions, like many other people, find the New York Open and the London Open the best. So now we have 4-hour candles. We did break, I want you to pay attention to this wick here because the wick does damage. We did break the prior 4-hour high, which means it took liquidity there and rejected. Okay, so that's very important. And now here's where I want to put in my Fibonacci from the swing high, or that is to say the swing low to the swing high. I'm going to use my special measuring tool, which is my 8th measuring tool. These different areas are in eighths. Then we jump to quarters for our 2 take profit targets. And I'm not using a projected tool here, but I'll be watching price closely. Now let's go down into the 15-minute chart here. As we look at the 15-minute chart, we see here that we took some liquidity out already here, and this becomes a double top. Okay, so we took out some of this liquidity, and what happened? Price was downwards. Now, depending if you're a bull or if you're going to be a bear this week, you might want to, if you're bullish, you might want to get it here where there's in the discount zone. After it takes out this liquidity, then bounce back up, something like this. Takes out this and sweeps these liquidity and all these sell stops here. Then after it does that, takes back off. That's plan A. Okay. We do have some buy side liquidity over here to the left. So we could actually do something different. But as I look at this 15-minute chart, there's something else I want to bring to your attention, and I'm going to highlight it here for you guys. We have a fair value gap here on the 15-minute chart. And that is a 15-minute fair value gap. And I know I have one here somewhere. Okay, there's a 15-minute fair value gap. I'm just going to change the color on that. And let's make the color, I don't know, something like that, darker, whatever. Just to identify that area as a 15-minute. And put OK, and then I'm going to lock it. Okay. So what that tells me, if price comes back into this area of inefficiency, just to fill that area, this buy side of this busy here, and kind of return to this order block or these breakers, and then go back up higher. It may or may not do that. But remember, we still have a little buy side liquidity over here. And we have some sell side liquidity down here where all these wicks are. Okay, so let's jump down into the 3-minute chart. That 15-minute candle, basically the bears engulfing of this group of charts here. We're in a range. We're actually in a bullish market. If we look at the daily, remember the daily, the higher time frames kind of speak everything. But we might be seeing some more profit taking here this week. We We haven't taken out the monthly high. We are at all-time highs, trying to retest those all-time highs possibly. But we have to see what the market's going to bring and deliver. So far, we have a fair value gap here. Remember, that's the 15-minute fair value gap. And it may tend to seek this liquidity here and then go up higher. It can do a number of different things. But as a trader, you need to be flexible. If you haven't seen that video on being flexible, please go watch that video on flexibility in the markets. Because you need to be able to flow with the market. And whatever the market's telling you, where prices at the time, that's where you need to be able to be patient, wait for your trade setups, and then set your targets, etc., etc., etc. So what would price bring this week? Well, we have to just be patient, wait and find out, and get another combine going till we get up to 10 combines, $1 million, and then we rocking and rolling then. So that's going to be my outlook for this week. My recommendation is to be patient. If you're going to scalp, watch your stops, look at your key levels, and if we break this structure here, we're going back bullish. But we have 1, 2 touches there already. It took out those liquidity there. The market's only going to do 3 things every day. It's going to go up, it's going to go down, and it's going to get choppy or get moved sideways. It does it every day. The market does the same thing every day. So the best advice I encourage you to do is find a price target and a pattern, more specifically a price pattern that you like. Stick with that pattern. Discipline yourself. You don't have to be in a trade every hour. And just wait for your patterns, your trade setup to form, because it will come to you and you don't have to chase price. So that's where my analysis is on this day's NASDAQ. I'm still a bull, seeking higher prices, but I could be wrong, and I have to be flexible in all my trading. Thank you for listening to this outlook. If you haven't joined, please like, subscribe, share with a friend. Come back for more. I'll try to teach you as much as I can. Love you, love you, love ya.